Hey, it's Mike. I am not an investing guru. I'm an average guy sharing my investment journey on the internet. I have some exciting topics to talk about in this video. The first topic we're going to talk about is how much we got paid in dividend income the last 2 weeks. We're going to talk about taxes. And finally, we're going to talk about what my next play in the portfolio is going to be. For some of you guys who don't know what this channel is about, is what we like to do is we like to build a side stream of passive income using other people's money. And the way we do that is over the years, we acquire ourselves a good set of foundational holdings. And what we do is we borrow against those holdings. Those foundational holdings that I own are Tesla. Some of you may disagree with this. That is fine. But imagine if this was the S&P 500 or SCHD, like a nice dividend fund or really good high quality stocks. So you build your position over the years, and then what you do is you borrow against those positions. So what I did, I had initially my position was about like $380,000, and I borrowed $300,000 against this position to invest in these things called income funds. So these income funds are this new generation of covered call investing. These companies sell synthetic covered calls to produce more income. So I initially borrowed $300,000, and as every single week goes by, because this pays me every single week, I'm paying down the margin. So the most recent payments I got, so 2 weeks ago, and then this last week, is I got paid $1,300 on the 14th, and then I got paid $1,200 on the 21st. We did have to pay a margin payment, so that monthly payment was about $1,224, which essentially means this payment cancel that margin payment out. And what I'm doing with these payments every single week is I'm not reinvesting the distribution. And the reason I'm not reinvesting the distribution is because of this strategy I'm trying to do. So what I'm trying to do here is my equity overall is $233,000. Now I know in the previous slide it did say my position was $303,000. The reason it's not reflecting that is because I am selling covered calls against my Tesla position, and the price that would cost to close out those calls is subtracted from this number. So if you take 303,000 minus this number, that's how much it would take to close out those calls. So that's why it's only $233,000 and not the $303,000. Continuing on my last point that I was saying is I want the equity amount here to equal the margin used. So right now I have some ways to go to equalize this. And then eventually at some point when this is equalized, if I do see some opportunities in the market to utilize, I will go ahead and do that. So that is the income for the last 2 weeks. You know, we got that income. We're going to talk about the taxes. So I just filed my taxes and I got my Robinhood document. And this is a screenshot live from the Robinhood 1099 that was sent to me. So this is the 1099 dividend section. So we'll go through this and we will discuss each section, and then we're going to give like a 10,000 foot view. So in this 1A section, it says the total ordinary dividends. So $7,538.88 were paid out to me in ordinary dividends. So what this means is whatever my tax rate is, so whatever my federal income tax rate is, that is the tax rate that I would have to pay on this. Qualified dividends are a little bit different. So, you know, there's different types. This is kind of what would be considered like capital gains, which is a lower percentage tax. So you could either be paying 15 or 20% on that. So there's that. And then this non-dividend distributions is what we all want, which is the return of capital. And then finally, the last section that was sent to me was this a 1099 miscellaneous. And if you look at section 8 over here, substitute payments in lieu of dividends or interest, $15,256.14. So I'm going to flip to this screen because I put all of them down here in like a nice line. So this is all the income I've generated through the portfolio in 2024. Keep in mind, the majority of 2024, I held positions in a lot of yieldmax funds. So predominantly Tesla, I had AMZ. So I definitely had a lot of yieldmax funds, and this is what the total is. So when I did my calculations, I made about $46,000 of income, and it looks like this is what I'm being taxed on. So this interest is just I had a cash position for a short period of time. I didn't have any margin, so it just paid me $8. So you could totally disregard that. In terms of taxes, when I was filing my taxes, this payment in lieu of dividends is $15,000. This is not like return of capital where it's not taxed. This is just tax at ordinary income as well. So if you think about this ordinary income and this sub payment in lieu of dividends is almost $22,000. So I'm paying whatever my income tax bracket is on that, which is actually a lot more than I thought it was going to be. I thought there'd be a lot more money in non-dividend distributions or that return of capital like they were saying, but that's incorrect. So it's kind of interesting to think about. So, I mean, in terms of the tax generated, obviously, like everyone's tax situation is different. I did have some capital loss from the previous year that I carried over, which pretty much negated any amount of taxes I had to specifically pay for this. But this is just an interesting thought exercise to see like what the different sequences were and where these different incomes were placed for holding yieldmax. Now, for 2025, my tax situation is going to be a little bit different because I'm predominantly just going to have XDTE in there for the income portion of my fund. So we'll see we'll have a comparison the following year when I do file those taxes in like which categories these are all going to be filing in. So if you're curious to compare what the income is looking like, this is what it was paid out for. All right, so we talked about how much the income was. We talked about taxes. And then eventually, once I'm done going over this portfolio, we'll talk about what my next play is for this portfolio. So my portfolio, $233,568. In the last day, you can see down 4%. Last week, we are down 0.42%. Last month, we were down almost 9%. In the last 3 months, we are up 1.38% for the portfolio. As you know, I'm selling 9 covered calls against my Tesla position. They used to cost about almost $10,000 per contract to close out. Now they're dropping down to $8,100 per contract because Tesla is trending down. So let's open up this Tesla position and we'll talk about the performance here. So you can see it's down 5% the last opening. And then, the last week down 3%. Last month, it's down 19%. Last 3 months, it's down 1%. So Tesla is trending down overall. As you can see here, this is where I got that $303,000 market value from. And, still in the positive off of this cost basis, but it is trending down. You can see here all the different positions or all the different covered calls that are open. See the little maintenance requirement here, and there's nothing more I need to discuss. In terms of my plan, it's going to involve Tesla, and it's going to involve a Tesla option. But let's kind of move along down to the XDTE position here. So total market value, remember I bought a $300,000 position. Now it's worth $279,798. Cost basis $53, as you can see here. That is the loss, so it says 6.73%. Carrying on here, you can see the different yields and what it costs, and then we'll just go through the payments. So the 14th and the 21st were the last 2 payments that I got. I didn't make a video last week, so on the 14th we were paid 23 cents. That paid us $1,300, and then on the 21st we were paid 22 cents again. So that is a pretty good amount of payment for the S&P 500 not necessarily moving in any direction. And then move along here, the buying power still going up every single time that I get one of the payments. It keeps adding to this pile, and we're still at a low risk in terms of the margin status. We're going to look at the details. We still have a $144,000 buffer, 5.25% interest rate, which comes out to $40.24 every single day. All right, going to this account setting. So when I showed you that earlier picture, I want to talk about that. I pretty much want the equity and the margin used to equalize before I make any plays or any different large purchases. This is talking about the different stock positions and then margin used as well as the margin maintenance. So when I started this $300,000 margin position, my margin maintenance was $66,000. Now it's slowly creeping up to $86,000 as Tesla is going down. Now to combat this, I'm thinking about a new play here. And so this is, you guys got to give me your thoughts on this. But what my plan is, since I truly believe Tesla in the next 6 to 12 months is truly not going to be trending in the right direction. And we're not going to see anything really move on the balance sheet, and it's been trending down. And one of the things I want to do is I want to sell some puts on Tesla. I'm bullish on Tesla in the long term, but in the short term, this next year, 2025, I believe is a wash. And I believe 2026, we're going to start seeing some real numbers increase on that balance sheet. So tell me what you think about this. So I have 3 different put positions that I want to implement. One is, this first one here is I want to sell. There's 3 different types of options that you can do. You can buy at the money, in the money, or out of the money. This one, I want to buy a highly in the money put. So what I want to do is I want to buy, and I'm going to show 3 different examples of this, and we're going to talk about the gain and loss for each one. So Tesla is the symbol. December 19th, we're going to be buying the 740 put, which is going to cost $40,363. And this is the price ranges here. So if I buy that put, if Tesla goes down anywhere between 11%, my gain is about $3,000, $2,900. If it goes down to 250, the share price of Tesla goes down to 250, I'm looking to bank about $6,900. Now, this is a 40K position, and if Tesla doesn't necessarily move, I'm still going to make money at some point. However, the next option, so this one was in the money. The next option would be at the money. So same expiration date, we're going to do December 19th, but we're going to buy a 340 put. So we want to use just about the same amount of money. So that the first put position we talked about was $40,000. So this one, if you sell 7 of them, it's going to cost about $40,000. And so the thing is, your income would be a lot more. So for example, if you did drop 11%, like in the other one, we'd be banking about $11,000. So if this is a short term, if Tesla does, go down in the short term and drops about 12%, we can bank an easy $10,000 from that movement. Now, if you do, let's pop back over to the Tesla chart here, because this is the support line that I believe Tesla is going to hit. So I believe Tesla right here is going to be a support line. Oops, no, that's not the one right here. So this 240, 250 here. Okay. So this is about 260, 250 here. So support line, support line, support line, support line, support line. So if Tesla does drop down from this point here, this 337, this is the last support before it drops down to 250, 260. So I do believe that, if we time this right, it's gonna hit that line, because I don't see any positive news coming out for Tesla the next couple months that are really going to move the balance sheet, because I believe more so 250, 260 is where we're going to be at. So if Tesla does drop down to 250, which would be let's look at it here, a 24% drop, we'd be banking in about $25K worth of option premium. And then the final thing is, if it does drop lower than that, so this is an at the money. The first one was in the money, and this one's going to be out of the money. So instead of 7 positions, now we're opening 20 for a very similar price, about $40,000. And these are supposed to be protective puts, right? So, I'm highly invested in Tesla. So if it does go down, my margin position, like the margin maintenance is going to go up. But if Tesla's going down, then I'm recouping that margin position loss because I am selling protective puts. If it goes positive, that's great, whatever, no harm, no foul. But this is a protective position. So now we're more out of the money. So, if the stock doesn't move in our direction, we're paying for it. So if you're really doing out of the money, you truly are banking that stock is going to go the way that you want it to go. Now, if we did that same thing, so like 25% loss, we look at over here, instead of $25,000, we're looking at $44,000 or $36,000. So almost $5,000 to $10,000 more. But then you're increasing more risk because you really have to have it go the direction. So I think for me, so today's Sunday, I think for me, the play would probably be selling this at the money one. So we're going to get 7 of these. We're going to be selling at the money. It doesn't have to move exactly in our direction right away. And if it does drop that 20%, the way it's trending, then we're going to be coming out with a pretty handsome payout. So I believe this is going to be the move. So, we're protecting our downside because Tesla likes to violently move in either direction. So if it goes up, sure, that's great. If it goes down, we can pay, we're not going to get like a margin call or anything like that because we're going to get paid for it to go down. So that's kind of like what my thinking is here. And yeah, that's kind of the next play that I'm going to be doing here. So, let me know what you guys think about it. The final thing I do want to talk about on this channel here is this XDTE spreadsheet here. So you can see these are the last 2 payments here. A lot of the times, these covered call funds, they don't do a really good job of like telling what the total return is. And what I like to do is I like to give like a total net income after the margin expense, because on this channel, we truly are using margin to build a side stream of income. And I think we should be accounting for that. So I have this little spreadsheet here that, this is a total market value. And since opening this XDTE position December 20th, we have been paid $18,292 in income, which is a substantial amount of money. But we are borrowing, $300,000. So that is a substantial amount of money. But you can see here, we got paid $18,000 in income, but our performance, the overall performance of that stock, we're down $20,000. And then we're also paying for, margin interest, but then also the Robinhood Gold, like the margin fees. So truly the net income is really $16,000 minus the fees. So really, we're down $20,000, or the price performance, we're not down money until we sell, but the price performance is down $20,000, but the net income is $16,000. If you balance the two out, we're still down $4,184, which comes out to minus 1.39%. Now, in the grand scheme of things, it's only been a couple of months, and being down 1.39% that's not a lot of money, right? Like the S&P 500 goes up and down for whatever reason, but we should compare what the S&P 500 is doing to XDTE. If you look at XDTE, and we're just going to look at the last month. So last month, the Roundhill fund is down 3%. And the way you compare the price performance to the S&P 500 is to look at the price performance. So, the S&P 500 last month has been down 1%. So overall, if you are, trying to compare the two different things, the S&P 500 is down 2% less than, the XDTE. However, XDTE is paying income, which can offset some of the downside. So, something to keep in mind. And that's about it. So, if you guys have any questions, definitely let me know. But hopefully this motivates you to do something similar, or maybe watch on the sidelines, just see how this really plays out, because this is a newer investment. But besides that, you guys take care and peace.